Hey guys, it is July the 5th, and what a crazy post July 4th holiday market that we're looking at. Let's take a look at what I'm seeing here. I'm going to share the screen. Past performance, it is not indicative of future returns. And, you know, it's a red day. We had talked about the fact that you need to be very hedged. And also, oddly enough, crude just broke 100, which is really abnormal given the news that you're seeing. Pretty much anyone I talk to that works in this business and has worked for this business for a while doesn't believe that this is the right number right now. But it is the number that it is. So you can decide whether you think it's a buying opportunity, which is what I think it is, or whether you just want to pause. When we look at the markets, this is what we're seeing. You know, you really only have a few things here. Let me refresh that are turning green, but they are turning slowly but surely. Everything is turning green. I think there's actually just someone that's unwinding a portfolio. Like, you know, you've got a couple of different areas that have been massively weak. And so certain portfolios or certain people that are just exiting the equities markets, this could be some of that that's going on. What I would say is that there is nothing fundamentally that would take you in a way that could suggest that anything other than very bullish energy. And my understanding is the minutes come out tomorrow, but I'm not seeing it on the calendar. So I'm not sure if these calendars are now updating crazy. But we have a lot of jobs data that comes out this week, as I mentioned. Largely speaking, this is a big nothing week as far as any kind of news flow. And then you've got the financials coming out the following week. What we definitely know is that a lot of deals have gone to the waysides or pushed out into the future a bit. And so I do anticipate that the first financials coming out are going to be weak, but I really want to remind people that as far as energy goes, the pipes do report first. They're going to report very strong. And then right after them is the refiners, and you really don't, and then equipment, the refiners. So it's going to be like equipment. So the pipes, then the equipment, which is going to be mixed, and then the refiners, which is going to be hella strong. And it's going to be hella strong because the amount of capacity that's been taken off globally, you know, you think oil has been taken off a lot. We always forget that refining capacity has also been taken off a lot. Continue to want to short specifically the German index, which is EWR here. Let me just pull it up so you can see. This has been my hedge. Sorry, MSCI Germany. I've been short this the entire day. Sorry, EWG. And we enjoy shorting Germany because it should never have held up the way that it has. It's only down 27%. And they're really talking about food shortages and energy shortages and what industry gets cut off first. The biggest component of this is actually an autos company. So, you know, there's really only one component in the top 10 of the German index, which I will bring back up from an old slide. That isn't industrial in nature. So that's why I prefer that to just shorting Europe outright. Germany, by far, the mix, not great for them. And unlike France, who has some nuclear energy, they do not. So that is what it is. Plus, France has additional refineries above and beyond what Germany has. So if you got to short one country, this would be the one. And really, not today. I mean, down 5. I think this market bounces around a little bit because this is a bit of an aggressive sell-off. The other oil news that you should know, Norway, the one EU country that's actually producing oil, their oil and gas output falls as workers begin to strike. And then, you know, this is what I've been saying the entire time. Our reserves, they're on a one-way train to Georgia, so to speak, and then out the coast, so to speak. No, actually, they're probably going to be tanked out of Texas, straight on over through the Gulf, around the tip of Florida, over to Europe. But most of it, unless it's somehow, and then anything that's being piped to the East Coast is going to probably head out to Europe, just because the spread now between Brent and WTI would make it plenty possible for people to want that price overseas over what we're seeing today. Again, I would say that I'm just going to give you a visual in case I haven't been very, very clear. Coal, my friends, coal. This is how we're going to get through the summer. Okay. The only person that might have a little spare coal is Santa Claus. So if I can't be more visual, more direct, My favorite name is CEIX, Consol Energy, because it is on the East Coast, and we will need that across the East Coast. But these record temperatures and droughts that we're getting throughout the nation, there's only one way that's going to sort itself out, and that is through coal. And that even also suggests that BTU, which has been clobbered because it did not do what people thought it was going to do this last quarter, just because it had already set prices and did not have excess coal, it probably will be a little bit of a surprise this quarter. So, it's $18. Find a spot and decide just to take a lottery ticket on that. But that's one place where I'm considering playing. Now, realize coal doesn't report until after some of this initial stuff reports out of energy in the next week or so. And so you might have another week or so to play this game. It's just a function of how long can people play this game before these companies report and raise dividends. At this point, Devon is now at these levels, giving you about a 10% dividend yield. And just a reminder, if this economy does in fact weaken, you will not be able to raise rates the way that the Fed would like to raise rates. So if we get weak employment reports, there goes a need to raise rates further, which means it's going to be really hard to get dividend yields that are 10% that you feel confident about. Hence, Devon, I would go ahead and take a little nibble today, a little nibble later this week, but you do have until next week as far as that goes. And then the truth will come out, and that is what it is. If people really want to sell on news, they've been selling all along. And I just think it's crazy because what are these things going to get to? A 15% dividend yield before you realize that this isn't a one quarter situation for oil? I don't know. Now, the other thing I just wanted to mention that is actual news flow is I told you that I would come back to you on the crop reports. This is what we're seeing. Okay. Corn was down 4%. What is corn's major use case? Well, some of it is for food, Chex Mix, et cetera, right? But the one thing with corn was it was potentially going to help us out with ethanol production. Well, that's not going to happen, friends. This is going to be a fourth quarter situation to see what Brazil does, which again bodes well for your fertilizer companies. Again, I prefer potassium phosphate to nitrogen because I think you still have to bake in some of the costs of nat gas and where that leads out. But given that corn's down 4%, this is not looking good, is what I'm saying. And then a lot of people were like, oh, they're going to ship the grain stores that are in storage from Ukraine and that'll help Europe out. That's not how it works. We need Mother Nature to actually sprout leaves and grow. And I want to show you this, okay? Wheat acreage planted was up 1% from last year, but that is all coming from Durham wheat, which is up 21%. That's what this report is saying. That's wheat planted in the desert. Okay. Like that's what they did to try to increase wheat yield. Like we're trying. And right now there's only so much we can increase our acreage. So now it really comes down to whether or not we're going to actually produce enough yield. That's where we're at in the middle of the summer. But this does not suggest that it is obvious what's going to happen on the food side of things. So I continue to be bullish and I continue to think that what's going on in the markets is a bit of nonsense, but great for the day traders and definitely bodes well for people that haven't gotten a chance to take an opportunity for the back half of the year as people exit the markets or alternatively play this nonsensical game of the war is going to end and that's why these things are going to that we want to get in front of it. No, friends, we already had a shortage going in before February. All that's happened is an exacerbation of really bad economic policy and a lot of talking heads allowing these things to settle below where would have made even sense if we were back in February. So, this is kind of nonsensical what's happening right now. And I would look to try to find opportunities. Again, for the options market is not for the faint of heart right now. You can do the options market. In particular, the refiners in today down 7% is probably the easiest place to play it because they're absolutely unambiguously going to do well, given that nothing has changed as relates to refining capacity in Europe. And all that's really happened is demand for energy because that hasn't been resolved. Coal is an easy place to play, but it's not as liquid. So with the refiners, MPC, I should have put it up. If you buy the 80, if you just get behind September is really what it is because their dividend yields at 2.5% and change percent for MPC, almost 3%. That's going to go up, not down. And with that, I will go ahead and hit the pause button and let people get back to it with some questions. What's on your mind today? What do you think is going on in this crazy market?
Well, oil was overcrowded.
You mean overcrowded to the long or the shorts?
To the long side. Too many people are long oil. That's natural.
Yeah, but this price is not this is too low for what's going on in the oil dynamic.
Right. You wait for the market to make a mistake and then you take advantage of it.
Would you take advantage today, or do you want to wait a day or so to see if it corrects?
It's on a 200-day moving average, so yeah, I think today. I mean, you start with today,
and then
I think
build up.
the market's okay. I really do. Interest rates are coming down. Inflation is kind of a thing in the past.
You think the Fed lowers?
What?
You think the Fed lowers?
No. I say rates. The bond market is showing strength, which means rates are coming down.
Oh, sorry. You mean, okay. So I thought you were talking about like, because the next move in theory is up, not down from the Fed's perspective. But you think the bond market is like, so you think the curve will flatten?
Yes. Also, Amazon. Do you have you've been
oh my God, I wanted to cry this morning as I was listening to CNBC talk about it. Like, couldn't possibly, it's like they were like, here is his anniversary, so let's talk about it. But no one even bothered to look at the numbers. It was so painful to listen to them because they're like, well, the grocery piece, do you think you'll continue to exit that because that's doing poorly? What the hell are they talking about? Like, if you go into the earnings report, that's the one area that's doing okay within their entire retail. Everything else is a disaster within retail. And then they like mentioned that when Jaffe became the CEO, it meant that the retail guy was not going to become CEO. And of course he left. Do you know what I mean? So like, I've been saying this the entire time. The whole question has been whether Jaffe can turn around the retail side. He still has remaining some great executives, but quite frankly, like just like with any company, you had two guys that were really strong players. One guy got the ball and the other guy took his toys and went somewhere else. That's what's happened on the retail side of the business. And even though he's still got some good people, he's still got to prove himself. I've been saying that since December, though. Do you know what I'm saying?
Yeah. Well, I mean, retail's, they overbuilt, overexpanded during the pandemic. So their big thing is AWS.
Yeah, I mean, it's all about the AWS, and then what do you want to discount, or what do you want to pay for a retailer that has to kind of figure its strategy out? His strategy was to wait until the third quarter and fourth quarter, but remember that strategy was first week of February. There's no new strategy in this last earnings report for how you bail the retail portion out. And then you've got a lot of people trying to build a good story. I get it. That's my job too, is to create a good story about how like he invested a lot in the company on last mile, and that should somehow bode really well. It's a tough call. I don't think he has the retail complex under control. That's my call on it.
Yeah, I think the argument for, okay, it's worth, you're getting retail for free. Well, not necessarily, because if retail's losing money, then it's a drag, right?
Correct. Thank you. We've talked about that for sure. It means that you've basically got to grow with two arms tied, or with one arm tied behind your back, because it actually pulls cash from the other business. And you've got some pretty strong competitors on the other side. You've got Microsoft, you've got Google to a lesser extent, but maybe not, because actually they showed a decent number on the cloud business this last quarter. But I mean, look, AWS is an amazing business. It is a cash flowing business. It still needs to, like, part of the problem is you've got to reinvest so much in that cash flow. But right now is the dead period. So you got a lot of people saying a lot of stuff on CNBC. Some of it demonstrates a very clear picture of what people are doing. Some of it is just malarkey. I've never heard so much more malarkey than usual on CNBC. They're really struggling in these last 2 weeks. It's really kind of crazy. I mean, this idea, like the food part of it, Whole Foods is not losing money, guys. Just look at the damn earnings report for once before you speak on public. I felt so bad for the guy because she said it and he wasn't going to like say that she was wrong or correct her. So he just kind of went along with it. I don't know if that guy actually knew what was going on at Amazon. To be fair, I think he was a tech guy that knew what was going on with the AWS. But I think that's part of the challenge at AWS is you've got so many people that are very strong on tech, and then they've got a mixed bag of understanding of the retail business. And all of them are responsible for talking about the stock.
They ask about how strong groceries,
well, she asked him this morning, she said something that implied that the grocery business was doing poorly. Grocery business was up 17%. I don't know what she's talking about. You know what I'm saying? Like that actually showed true top line growth last quarter.
That's a smaller part of the revenue.
Small part of the business, completely insignificant and irrelevant to the Amazon retail story and what it means to turn it around. 100%. I mean, cool. Here's the thing that they could do that would be smarter is look, they could try to reduce their costs by making Whole Foods. And they have done this and they are trying to do this, like basically getting people to bring it to Whole Foods to return stuff, which allows them to then put it on the Whole Foods truck, which they have to ship that back anyways to the warehouse. Do you know what I mean? To try to reduce costs. Like that was actually legitimately a smart move that they did in the second quarter. So I have no idea what she's talking about. Now, whether or not that's enough to lower their freight costs, I don't think so, because there's still a lot of people in the middle of the country that do it the old fashioned way. So you get a nice little beautiful bill from UPS.
Okay.
Look, it's in a tough spot, fair and square. Amazon's a good business, but what is it worth is a different story. And Jaffe's got a lot of wood to chop in order to get that retail thing turned around. And it's not his background. So that's really what it comes down to. He's a smart exec. Well, I don't think he does it in the third quarter. But the stock's kind of priced a little ugly right now for me to be like large scale shorting it. If it tries to peek, if it tries to play peekaboo with me again, I'll smack it down. What's that?
No, you don't want to short it here.
No. Right. Exactly. If it plays peekaboo again, then maybe, but right here, it's a tough market right now. The only things that I feel comfortable telling people that they ought to try to sniff on is really like something like Devon that's going to be close to a 10% dividend yield if this market continues to have its way. And 10% dividend yield, zero risk to the stock in any way, shape, or form, and Europe sitting there with no oil whatsoever needing LNG, Devon should be just fine.
I agree.
Yeah. And I think if you can get behind September, somewhere in here is actually the right place to start buying fertilizer again. This crop report was horrendous. And I don't know why people, there's like all this news today, and the real news was that crop report. That was terrible.
Please, what do you mean a crop report? Grain?
Corn? The grain. Okay. Yeah, the report from last week. You increased grain 1%. You think that's not enough to compensate for everything that happened in the Ukraine?
Oh, cool. Yeah. Okay. I see what you mean.
And then we still got droughts. So even our increase of 1% on the acreage isn't enough to like make up for just the droughts. Do you know what I'm saying?
So is it 1% on wheat?
Here, let's just show it. Let me show it again. Wheat is actually here. I'm glad we're going through it because I know everybody has stuff on their mind. So corn planted. So corn is down 4, right? That's bad because corn actually, some of the corn always gets reallocated to oil to create ethanol. Exactly. So despite the fact that we've lowered whatever it was we were doing on ethanol, you know what I'm saying? So that's not good. Sorry, I got a little buzzer on the right, and sometimes and then we've got soy up 1, which is good because basically that's going to make up for some of the sunflowers, but it's not going to make up for the bulk of the sunflowers. Remember, we got an oil seed issue that's happening globally, and that's what soy would do, but up 1 isn't going to do it. Isn't going to compensate for the massive lack of seed that we have going on. Cotton up 11% is very helpful to retail, but that doesn't help us with with feeding ourselves. And then you've got wheat up 1%. Most of it's coming from this desert wheat. That's how desperate you know what I mean? Which means essentially people are putting out a lot of acreage and they're hoping that the increase in acreage helps to have less. Look, fertilizer is expensive. So if you're just going to plant more acreage, that's fine, but it's not a lot of extra acreage that's being planted here. In fact, it looks to me like it's on net down.
So when does Mosaic report?
I believe it reports first week of August, but let me double check because we're in the in-between time. So in the in-between time, these numbers are estimates on when they report. So they're estimated to report that first week. of August, but that's the estimated time. We won't know until they come out and say, hey, this one we're reporting. So that's the problem, is you got to get through August. And that kind of makes sense. They could even, like they could wait until the first or second week of August just to see how the crops go and then report.
Okay, anything on China?
Oh man, the world wants to believe that China is going to do great. And China, I think right now there's a negotiation. They're like, we're going back and forth with them on whether we're going to like remove tariffs or what have you. I don't see a way out of this situation without just giving China what it wants, because Europe's in a mess right now. So this one, I think, is a three-way trade. I don't necessarily mean that's bullish. I don't necessarily know if that's bullish China or if that's just like a huge pause on like a bandage on the world to try to lower inflation until you can get past this hot summer. We're in the weird part of the year, right? Because we're in such a weird part of the year. At the end of this summer, we will know how bad the grain shortage is. We will know how much additional reserves were drawn down across the globe as relates to energy. We will get it, like the truth will come out on coal, or it will not come out on coal, one way or the other. And then once you know how much drawdown was done across the globe, because the one thing that people don't know is what Russia precisely is doing with its fuel, like who's actually absorbing that fuel and whether or not they're just like selling out the fuel that they have, but taking down production, or what's going on, because we're not talking to each other anymore. You know what I mean? I mean, maybe other people with airplanes and more resources than Mei Ling know exactly what's going on in Russia, but I don't know what's going on. All it sounds like to me is refining capacity is not doing so great. It's a mess. The world's a mess.
Okay.
Let's see. Anyway, that's it for today. Talk to you tomorrow. Good luck.